following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you had a good holiday weekend, Memorial Day. Hope everybody had a good respite there and back ready to get back on the wagon here as far as trading goes. There's a lot of things out there we need to talk about. One of the situations out there that's pretty attractive in general to me is the euro. I've got it on the screen right now. I hope you guys are seeing it. Did a little bit of a Bloomberg brief on this and really had kind of caught it too early, talking about the possible cave-in from around the 115 neighborhood. And then that happened. I looked like a Monday morning quarterback if we were going to release that information. So he kind of had to redo it a little bit after the fact. Because I hate those guys who come out with stuff after it's already happened. And it's not a great actionable situation. So talked about the possible snowball effect when this thing starts technically breaking down below some levels. And those levels, as they were before, were around that 111 general area, those weekly unfair lows, and then we had kind of started crossing some borders initially around the 111.65 area on the euro. So that was kind of cool to see that technical damage, to be able to kind of get back in the water, to start taking some chances around that 115 area, and then get those confirmations 400 pips later below that 111 area. And now look what's going on. We're trading 109 and some change. So to put that in perspective, as a trader, you always want to kind of try to figure out situations, battle points, high probability setups where you can compress those time frames and not have to kind of wait around for the trade to develop. And this was one of those very ripe situations in my mind. And on Bloomberg, by the way, you're seeing our profiles up here. The profiles have a little bit of a dynamic action to them on Bloomberg. Now they kind of shift around. And what we did in the retail space, or not in the retail space, but on other platforms, there's a lot of institutional guys that actually use these signals, which is what I'm showing right now. We kind of give the warning sign of the orange bar first, instead of having the profile jump around and then having to kind of, lock in almost not potluck, but so e-signals showing the box attempting to form and then the box concreted in on the next bar. Bloomberg, we kind of show boxes or profiles sometimes flashing and then disappearing and flashing and disappearing. So the Bloomberg chart profiles look a little bit different on that Bloomberg brief, as if they were enacted one bar previously, but that's actually not the case. That was just the lock-in mechanism. So what do you do with this trade now? What we had talked about, if you missed that Bloomberg brief, is we started showing some technical damage. I'm just going to kind of walk you through this euro trade, and then we got to talk about the Shanghai. We got to talk about the British pound, because that was kind of a reversal situation, all dollar dependent, of course. Here's the weekly situation. So the brief really focused on the breakdown at 135.52 right in there, and the coincidental cross of Navigator into zero or negative below zero territory for the first time. Now, when that happened, and we actually got a little bit of a ahead of time look at that, we started using weeklies and dailies profiles all the way down. If you've been watching this show, I haven't really kind of wavered from that point too often. And as we had kind of started breaking some borders here around 111, that coincided with that. In fact, 107 was one of the topics that we were talking about on the dailies, that, hey, let's say uncle above 107 and let's try to pick a battle around 111. If that doesn't work, we try it again around the 115 neighborhood. And remember, these weekly inflection points aren't as to the tick as some of the lower time frame ones. So we're able to try to pick a battle. And the reason that we really didn't have any major reservations about this, I'll get into that in a second, John, but the reason we hadn't had any major reservations about continuing to try to pick the battle at 107, 111, and then at that 115 neighborhood was because that's where, it's the lose a little, lose a little, lose a little, make a lot. In this case, it was lose a little, lose a little, make a lot. All right. So you pick the battle, you take your medicine. If you're wrong, you pick the battle, you take your medicine, you pick the battle, and boom, guess what happens? You got 600 pips in your favor. And that's a nice little trade. So the reason we took that stance was because, for one thing, we had no weekly long-term technical damage, so to speak. And the first hints that we had really, and I'm going to go to the daily, and I'm going to show you something really cool here. See when navigators below zero, so we cross above the zero border positive. At the same time, we're starting to break and have some technical damage, getting past that weekly unfair low and the daily unfair high. And that's when we were like, okay, got to sit still here for a little while. Let's wait until the market either comes to us up top, or let's wait till we have a breakdown again below some of our inflection points. Well, we happened to go up top first on the 115 neighborhood, and then that provided that trading opportunity. Now, you may be saying, well, Logan, you're above zero on the navigator down here. There's no divergent situations that I can see. And, why are you trying to go short? Because remember, weekly takes precedence over daily, over 240 on down the line, and we were still within the fair auction and showing that it was okay to still pick the battle in the long term. Now, in the back of my mind, on this type of trade, I'll tell you flat out that, everybody and their brother has been trying to short the euro lately to get it into this par situation and maybe sub $1 for €1. And there's no free lunch out there. And, I was in the back of my mind, I was like, what, they could run this thing past 116 just to do it, to get those types of folks out of the market before they possibly may turn this around. So, that was kind of going on. And I was like, what, maybe this is a 3-time loser before it's a winner. And that is a really good case in point of how trading goes. All right. And that's how you save some money. And Tom and I were talking about the other day, these reports come out as, don't look at your brokerage account, don't trade a lot, long-term investing, blah, blah, blah. Well, what happened to those types of folks in 2008, and that could happen again. And I'm a big fan of being a little stingy and trying to find those technically ripe areas to try to pick a battle in. So that's enough on the euro, but what do you do with this now? So here's the daily. Again, pretty far below profiles here. We had that great kind of retest there, which, as we know, if you've been watching this show a few times, you know that's what I kind of lick my lips over. Here's the 240. So again, what do you do with this now? Again, if it ain't broke, don't fix it. We've got 109.62 sitting there, short-term leverage point we just broke below. That can be stops oriented above there. That could be a leverage point here. You've also got this 110 even point up top to pick a battle again. You could look at this as collection area on the short side between 109.62 and 110 even. This thing does not have to snap back. If you've been watching the euro over the past year, you know that this has been the case. And I can't even share that back that far because that's our daily. We don't have enough data on that one. I got to adjust the chart. Since July 14th, we have not had any major technical damage on the long term as far as profiles go. Can this thing go lower? Yes, it can. Keep that in mind. Things on their lows go lower and things on their highs go higher. Somebody told me that, and I've tried to always remember things are not on sale until they show some technical reasons and some conviction in a turnaround. So where do I think this thing's ultimately going? I kind of let the profiles regulate the trade if you watch this, so you know that. So this is kind of the next thing on my mind in intermediate and the long term. I'm looking for Now, if I'm doing any short-term trading, I think that you've got a major victory if you've been listening to some of the things that we've been talking about already. And is it time to take things off the table on the intermediate to long-term side? In my opinion, no. I mean, I think you still got some extra room down here, and the way that you would have some warning signs is if you've got access to this. And I'm not saying this is the key to your trading religion, but if you have this scanner, which I'm showing right now, you will see some information that will start popping up here. I.e., if you remember, we were seeing on the, and I'm strictly focused right now on our intermediate, which is our leverage points, bottom of the box, 111, 64, 62, 63. We don't have any new profiles attempting to appear. Now, do we have something here on our 240s? Yes. Do we have something here on our weeklies? Yes. Is it the second day of the trading week? Yes. Can that disappear? Yes. I'm looking more towards our dailies for some confirmation that we may have some new information attempting to appear, and I don't see that at all. So to answer your question about the 104 situation, that could go there, and it's like the fine wine theory or concept. Let a fine wine breathe. This may actually have some more downside. I mean, I don't even know if grease factors into this right now. That's not, to me, that is not a mystery whatsoever. I mean, like as if they were going to pay this thing. No. I don't know. This guy's got a smile on his face. He comes to the meetings. He shakes everybody's hand, wrinkles his forehead, looks concerned, and I'm not paying. That was the deal there. So I don't know who thought that was ever going to come true, that they were going to pay. All right, so I got about 40 seconds left, and I tell you what, we're going to take a look at this yen, and this is something I've been pounding the desk on. Is that how you say that? Pounding the desk about. 121 up top. We got the weekly close above. We didn't even come back and retest. So again, we've been talking about, just let's try to find reasons to buy this thing. Let's try to find the support. Let's try to find the breakouts. That's just been an awesome trade. Okay, now what do you do? So we're trading 122 and 70, and we're going to come back after the break. We're going to take a look at the yen, and I'm kind of looking at it like the euro. It's a polar opposite, and there's not a lot of reasons to get out of this trade right now. We'll be right back, folks.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're finishing up with the Japanese yen here. Kind of what do you do with this thing now? Just been pounding the table about buying support breakouts on this thing for a while. I got a couple of friends that are not unhappy right now. So here's the 240s. Not a lot of reason to get out of this. This is the 240s, much less the dailies and the weeklies. No reason. I mean, I got to tell you, I've been thinking 130 on this thing if it breaks out. But again, don't. There's going to be some rough roads between now and then, and that may not ever happen. So, what do you do with this? Based on what I just said, you let the profiles regulate you out or back into this thing. And right now, you don't have anything slowing it down. There's no new, even on the shortest term that we look at, there's no new information here. So again, going back into the scanner, again, this is our currency area of this thing. So we're looking at the EUR/USD. Not a lot of things going on there to pay attention to, and that's just the way that works. So let's take a look right now real quickly. Saw some gold comments come up, and we've been talking about not really getting too excited about buying gold lately. That 1205 area, passing on it. Here's the situation on the 1205 area. So, we basically 1205, we caught a little bit of a bounce a couple of times there, but we're not really excited about buying it. Didn't like the way it kind of gravitated back down to it. So what do you do with gold now? Again, this is what we've been kind of preaching about gold. We've been talking about there really isn't any leverage within this profile here. This is our long-term weekly. We talked about waiting for breakouts about 1230 or basically cave-ins below 1171. I'm still standing by that. If you just kind of get away from this thing for a second, you're not in the middle of a long-term profile anymore, but I wouldn't take this as like the end of the world as far as gold goes. we're just kind of rattling around in the balanced area. And again, I don't see a ton of leverage here. Here's the 240s. We 1205, 1202, boom, there we go. And when we have prices kind of compressed into these inflection points, the 1205s of the world, and then that's not a kind of a bounce gathering kind of continuation north kind of pattern. So beware of those in the future. You want to see prices get away from these inflection points. That's the general theory. Just like, when we got into that 1230 on gold, I mean, look at, didn't want to be there, just got away from that area. And that's kind of the theory here. So what do you do with gold? I mean, the question is, does this thing keep going south? Again, my thought on it is to kind of get rid of all the headaches, just stay away from it until we're in this 1170 or 1230 area for gold, because we're just short-termers. You've got really nothing to even look at down here. So the 60-minute, nothing on that one really. It's just yeah. I don't know about runaway, but just stay away. That's my thoughts on gold. Let's take a look at silver, because this was something that was a little bit better relative strength situation. Tried to pick a battle around 1717. That didn't work. Another little situation around 1695. Have not been a big fan of buying gold or silver. Just plainly stated that silver, if you had, put a gun to my head or maybe to your head, force a buy, that you just kind of had to wait for some of these inflection points to be approached. Russ, we are going to take a look at the British pound. It was actually on my list today. Not that it's usually not on my list, but this is a really good kind of primer on, we kind of had caught some bounces off of that, weekly around 154.60. And again, those were kind of trading bounces. They weren't guaranteed. We closed above and we came back pretty quickly. So, and there's that 154 area that kind of lined up with our 154.41 area, and we caught a nice little trade there. But again, using these daily profiles to regulate it, I think, where do you take profits on things like this? I mean, let's just drill down into the 240s. Let me just see where the dates are here. Hold on. Is that the right date? Yeah. So the uncle point really is when we start crossing the borders at 155.55. And I on the way back down, I'm sorry, let me clear that up. We had the weekly bounce there. This was kind of the Custer's last stance on that particular trade. Now you've got some pretty serious technical damage going on it. But we'll talk about that a little bit farther, Russ, when we come back. Thanks for bringing it up, by the way.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. There's so many cool things going on in the currency world right now because the dollar has broken some little areas that actually was going to do part of the Bloomberg brief on the dollar, but they kind of put the reins on me. They said, this is called a brief, Logan. You can't talk about the whole globe in a brief. But I wanted to really kind of, we're kind of had the troops on the border on the U.S. dollar. This is our weekly. Troops on the border being that 95 general area. Pop, boom, closed last week above, and that's what you call some technical damage there, folks. So let's see here. Here's the daily situation. And the reason I wanted to do it on this too is coincidentally had those inflection points really lining up, and this sometimes it works out like we wanted to, folks. Let's take a look at I'm going to murder somebody who keeps Skyping me here. As we look at the Australian dollar, this is the situation where we kind of were able to start getting our toe back in the water here below I've been really, really bearish on this thing. And it did kind of astound me when we kind of broke stride, got above, closed above, launched a little bit high there up. That was the greatest thing about using these long-term profiles is that it keeps me out of doing some stupid things that I used to do when it comes to trading. When it's kind of okay to be short, not okay to be long, and okay to be long, not okay to be short. So we had those inflection points lining up, and we were, at some point we're able to start looking at this with a little bit deeper conviction, namely around that 79 area. Okay, so you might be saying, well, thanks for getting me into the trade above 81, but this thing could have gone to 91. That's the thing about trading. They can take you out in a body bag. I hate to be so what's the word I'm looking for? Depressing. But you don't want to get in those situations. And the way you avoid those situations is not trying to be the hero and think that you're the guy who somehow figured everything out on the highs of the whole move or the lows of the whole move. Wait for the conviction and the confirmations to happen is my opinion on this. So let's go back into the, and what do you do with the Australian dollar now? I'm going to go back to this for 2 seconds because I didn't complete my thoughts. I think you still put stops above 79 on the long-term trade, and you hope for that 76 down below. It's kind of being stingy, stops above 78.11, and a little less stingy above 78.43. Let's take a look at the Canadian really quick. This has been something I've kind of had my eye on because I was a little amazed that it actually even valued itself even as high as it did. But we got back down into that 120.5 area. Finally got back above, and that was in concert with, look at this. I want you to take a really good look at this. This is Canadian dollar. Very same situation going on here, just like the U.S. dollar, a little bit of an inverse relationship, but kind of crossed the weekly unfair highs again, got back above that area, and look at, this is a very pretty situation. We talked about this, and now we're above the points and well. So that's the main question. Recalculate. How you doing now? Did you? Okay. I don't know what's going on with the signal here. Okay, here we go. Yeah, I don't know what was going on there. So anyway, Canadian dollar. So what do you do with it now? You don't short it. That's the first thing you don't do. What do you do? The 240 profiles appearing below. There's no new information up here. Again, you'd have to look to the scanner to get those real time. So again, there's not a lot of reasons to take this off. Long-term traders, I know this is pretty far down there, but long-term stops have to be below to be somewhat stingy on the long-term trade. 122.65 on the Canadian dollar. All right, let's get back into something other than currencies for a second. That's the U.S. dollar. We're going to avoid the S&Ps real quick. Picture got clear, okay? Okay, so this is, again, Shanghai continues to astound me. This is real, guys. This is not an internet stock from the year 1999. This is the Shanghai Composite. I think this is the Shanghai 380, actually, not the Shanghai 180. What we do in the scanners, we show the Shanghai 180. And as you can see, that's our deep screen. And this is this color scheme is built to make you nauseated, so we think we've succeeded in that. So here's the Shanghai 180. And as you can see, our breadth situation just pegged, starting to have some yellow shoots, as I'd like to call them. This is the Shanghai 180. So new box 10 up here and above. We will have some new supply happening on a very short term, but the long term, guys, this is kind of amazing. Watch this. Let me just blow this up for you. That's a spread, and there's two stocks trading below profiles on the Shanghai 180. Two, if you can see that. And by the way, we got this done. We got the user and password thing done. And this is a nice product that hopefully will increase your alpha and decrease the pain. So here's the Shanghai. What do you do with this thing now? You don't short this either. Let's go back into the 240s. I mean, can you believe this? I mean, this is insane. So, again, 240s appearing below. We've got no reasons to take this off. And the guy who does some of the programming for us, the color schemes, he's He's actually colorblind. We always have to work with him, and I apologize for some of the misgivings on the colors, but we're always willing to work with him and work through these types of color schemes. I'm just kidding. Here's the Nikkei. We're going to take a look at this really quick. We're going to stay in the Asia Rim. Nikkei, here we go. Again, we talked last week about the close above, the reasons to start looking at this from the long side again. Okay to be long, not okay to be short. There's no reasons to take this off, believe it or not. There's 0 reasons to short it if you guys are trading Nikkei futures. All right, so we're going to cover a couple other, treasuries. 127, 127.11, still the collection area there. I'm kind of astonished that we're holding up as well as we're holding up in the treasuries with all the rhetoric out there from the Bill Grosses of the world. So again, I'm still kind of a fan of buying treasuries with stops below 127 on the long term. Give it maybe a little bit bigger safe landing area than you normally would. This is I'm doing the victory pose here. Soybeans, new crop. Me and John from Philadelphia have been talking about this, I believe. That retest, close below retest, don't want to beat a dead horse, but that 940, 942 area, and we're approaching sub $9 a bushel on this finally. So again, $9 is going to be a big number. We've been beating the table about this one on the short side. How do you trade this now? Here's the 240s. Look at the regulation of the trade now. There's the 942 area. There's the, there's a 942 retest area, 940, 942, 940 being the weekly unfurloughs, 942.5 being the daily unfurloughs, and no reasons to take this off. No technical damage, excuse me, even on the short-term 240s and on the dailies, nothing. I got nothing. So we're not going to be scared out of this trade. A lot of guys, they can't stand to see profits. They have to take it. Don't be one of those guys on November beans. Let it stop you out. If you ever traded grains, you know kind of what I'm talking about. All right, so let's cover one more usual suspect here. The crude oil situation. Crude oil's kind of, again, we've talked about the ranges here. Look at this. Bottom of the range, 57.94. Let's call it 58. Up top, 61, rounded off. Right in the middle of a fair auction, kind of collecting itself. I wouldn't get too bearish on crude oil right now. Crude oil's like gold. It's just kind of bleh. Did I say bleh? Let's take a look at a couple of stocks we wanted to kind of cover today. Amazon, boom. Johnny, where do you think those things are going on the November beans, a new crop? Just throw a number out there. Think about it, of course. All right, so let's take a look at Amazon here. Yeah, you know what? I think they're going to exaggerate this thing. I think we're sub 850 myself, and it's going to hurt. And I'm sorry if somebody's long beans right now, but they never let you out easily sometimes on these grains. They always over exaggerate. So be prepared for something like that if you're hanging on long on beans. I mean, you've got a lot of technical damage that has happened on beans. I'm not here to berate anybody for not being out of any long positions on beans, but you don't have a lot of reasons to initiate a long right now, if you know what I mean. So you can always re-enter the trade. The market will be open tomorrow. Here's Amazon. This is the had some news out. I'm going to go back to, let's see, pre-market. Looks like we're 427. So again, the big inflection point numbers to pay attention to on Amazon are still 419.44, 434.11. Keep those in mind. Right now, there's not a lot of leverage. Some people are calling me like, hey, they're opening up in Europe and blah, blah. It's like, so let's wait till we either get a breakout or some kind of pullback. If you want to be long Amazon, we've had an exceptional bounce just on technicals, from 420 up into 435, or 437 actually. So let's take a look at something else I wanted to take a look at this morning. I had a couple of emails about this one. GM. 34.69. That's where you're going to have to say uncle below this type of trade. Pre-market, we're trading 35.62, and we just started getting some legs finally above 35.16. So you got some really good support down here. Let me just restate those numbers: 35.16, 34.69. That's the collection area for this. And by the way, where's the S&P? Here we go. Got this ranked on dailies. So I'm going to go down into GM really quick. There we go. And as they say in North Carolina, Viola. 35.16, top of the box. 34.69, top of the box. So you've got that collection area there. You see that green. Here's the landscape view. Here's that collection area here for support, and definitely stops below that DMZ. And by the way, wow, that's kind of cool. So that's the situation on GM. A little bit bullish on it. And we're going to take a look at Twitter here. Excuse me. Choking on my own spit again. Here we go. All right, so Twitter, a little bit different story. We're trading 36.73 pre-market. So we're kind of coming back up into the daily unfair lows. Now, you know, if you got to, you know, stocks like this, I know there's not a lot of good news out there on Twitter, but stocks like this, you definitely want to put the stops in. A lot of people have piled into this, waiting for another shoe to drop. But it's just like, you know, the euro rallied 1,000 pips from the lows recently. Twitter could just kind of go in your face a while. So you're going to have to put stops above that 37 area if you're going to try to trade this next tranche down on Twitter. And if we kind of get back up into this area, you're going to have to take a look at the 240s to try to regulate that trade. So again, am I a big fan of going long Twitter? Absolutely not. But remember to put your stops in if you're going to play the short game for the next wave down on Twitter. And I fully believe it is going to have a next wave down. Let's take a look at John Deere. Let's get it teed up. And we're going to be back from break. We're going to hit a couple of things before the market opens. You guys hang in there.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. I always look behind me. I'm very paranoid in general, and that's just what I do. Just kidding. Here we go. John Deere. Let's take a look at it. Had a pretty good, obviously news story on this. Pre-market, we're trading 92.72. By the way, you're in for a real treat. Larry Pesavento is guest hosting the Trader's Edge this morning, right after this show. Hang around. He's just awesome to listen to. Steve Rhodes is taking a little bit of a break today. Here's the situation on John Deere. We opened up the other day above this 91.64, so this was kind of an interesting situation. We said, let's look at this from a risk standpoint. Where do we put our stops? We let this thing open up. We hopefully kind of gravitate back down into these inflection points, 91.64. That's where we put our stops below, and ended up being a really nice little trade. Just pulling that up as somewhat of a primer here. I'm not going to say it. Time Warner Cable. All right, obviously this is kind of the stock du jour, the Charter Communications, Comcast, the whole combining everything so you'll be at the mercy of one provider and never be able to get hold of their tech support phone numbers and have somebody help you. Time Warner Cable. Okay, so pre-market, let's just kind of tell you what's going on here. 183, 184. We've been as high as 192. How do you trade this? Again, Do you kind of step in and put some form of capital to use here on the short side? No. I've got our lawyer next to us, and I call him Dr. No. He says no to everything. But I would be saying no to shorting Time Warner Cable here. And do you buy it? You just don't have it. These are news story related, driven type mechanisms, and they could be all over the place. You could have people coming in mass to take profits on something like this, or you could have a wave of new buyers that think it's going to higher. But we don't have any inflection points to pay attention to here, and that's kind of the damnable mess of it, so to speak. All right, so we're going to take a look at the S&Ps. We haven't covered those today, so I kind of saved that for the last minute or so here. So, we've been kind of breadth mixed up. When I say breadth mixed up, this is exactly what this means. We've got the S&P dials up here. We've kind of not been the deepest conviction in the world on most of the S&P stocks kind of cooperating with this move up. Until recently, it just, this hasn't been something that I'd want to take a lot of risk on. So what do you do with it now? Nothing, no new profiles on the daily, which is not the best thing in the world. But on the 240s, we have periodically tried to use that break. We were waiting for a break here, never happened. Had a little bit of a break there, had to get stopped out. Got a little bit of a break here. So, is it the best short in the world? It's definitely a contra trade against a long-term trend up, without question. But you could orient stops above this 2120 area. But again, it would be super, super cool to start seeing at least an orange bar appear on our daily, signifying that a possible new profile is going to appear. And also at the same time, starting to see our breadth situation right here roll over. As we've got the 240s and the 60s doing it, I see some intermediate cooperation here. Guys, hang around. That's the Ventos next, and you're in for a treat if you've never listened to them.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.